going on, everybody? What's going on? So it's James Hollingsworth on the Working People's Podcast, where everybody desires to build generational wealth and a financial legacy for the family. And I needed to come through tonight with just, I don't know if I'll call it distressing, heartbreaking, revelatory. It's a lot going on. So I've been thinking about coming through and making this little video for a few days now, with a lot of things going on. And maybe perhaps some of you have heard about it and some of you haven't. But I just want to really give my perspective on a couple things. And hopefully it will just bring some, maybe for some people, it will be something you hadn't heard about and didn't know about. And for some other people, it might bring some clarity or just maybe a different perspective about a few things. But if you've been watching what's happening in the financial sector, you've seen what's happened with FTX and what's happened to a broad range of cryptocurrency indexes and things like that. And along with that is there's a number of gurus or people that's just around in the financial space that's giving people general advice in terms of how to manage their finances and things with credit card, stuff like that, different types of how to beat the game and play the game and things. And look, let me just show you this real quick. I want to show you this real quick because where is my, did I share my screen? There it is. There it is. So let me show you this. Share my screen. There we go. Show on stream. So if you remember, this was 5 months ago. 5 months ago. Stock and Crypto Investing 101. Let me turn the volume off. I don't want the volume playing in my ear. But in this video, I talked about stock and crypto investing 101. And some of the things I talked about in this particular video was my hesitancy about crypto. And it's not to say that I wouldn't ever invest in it, but I gave my reasons why I was staying away from it. And I gave my reasons why I didn't feel that, in my case, that it was something I felt wise to even touch right now because of the fact that there's no regulatory environment with the SEC or any type of government entities that's really regulating it or has any type of oversight. And so as of late, we see with the Ftx bankruptcy, and that has happened with Sam Bankman-Fried, that situation. I'm not going to give like the whole story, the background or backdrop about it. So go and Google him and look him up. He was the founder and CEO of FTX, which is basically like a what do you call it? A crypto exchange. So you can put your money on this exchange, and from there you can invest in different types of crypto or different types of coins or whatever currencies. Digital currencies. And so they filed bankruptcy, and basically the business has totally collapsed. He filed bankruptcy, but for all practical purposes, you're talking about $1 billion, the second largest cryptocurrency exchange, basically collapsed overnight. And then as the collapse happened, let me come up out of this here. Then as the collapse happened, then and many people, a lot of businesses, banks, financial entities, well-known people have invested and had money in FTX on the exchange. And after the collapse and after a lot of stuff started coming out and a lot of dishonest things that were happening, this young guy, I think he's like 29 years old, Sam Bankman-Fried, then shortly after that, then all of a sudden it hits the news that they say, Sam Bankman-Fried and FTX, they say that, oh, we've been hacked. So I told you about my, and I gave you this scenario in the video that I did 5 months ago. If you have someone who has no oversight, they have no governing, procedures, policies, nothing that's that they have to necessarily legally abide by per se, and they own. And the example I gave was they own 80% or more of a particular, and I call them knickknacks. And they have full control. They have the ownership and the percentage of ownership where they can move the needle however they want. So they also had a parent sister company. Let me go over here. Called Alameda. And the young lady that was running Alameda, I hope I'm pronouncing it right. Recently, it came out that she had interviews, and in this particular interview here, I'm not going to play it. She talked about how she didn't need to use her math degree. It's really just really basic elementary math that she used, and she has a strong aversion to risk. And so for her, if she takes risk and bets on investing these billions of dollars, she said she don't even see a need to have stop loss orders. No type of, she didn't see that as a viable or actually a suitable risk management tool to use, stop loss orders. So this is the young lady right here that was the CEO and running the sister company of FTX called Alameda Research. Her name is Carolyn. What's her name? Let me go back. Carolyn Ellison. And there's speculation on if she is possibly some kind of way, maybe romantically linked. I don't know. But there's speculation possibly romantically linked in some kind of way to Sam Bankman-Fried. And supposedly the people that was running FTX, they all had this little small place that they all lived in together in a little community. And along with that they were possibly all romantically involved with each other. But so you have the second largest, here it is, Sam Bankman-Fried crypto empire collapsed. You have the second largest exchange, cryptocurrency exchange, billions of dollars. You hear me? Being ran by this young man. I believe, like I said, that he's 29 years old. And this is when I say, look, when you're talking about investing, you have to do your due diligence. And when you're investing in stocks on regulated stock exchanges, like the S&P 500, even the pink sheets on the, where the penny stocks are, and I'm having a brain fart right now. But the NASDAQ or the Dow Jones Industrial Average, when you're investing on a regulated by the SEC, the Securities and Exchange Commission, regulated entities, and you're investing in things like that, you have some layer of protection, and then you have the disclosure that, look, when you're investing, that we're not guaranteeing you, a return or anything like that. We can show you historical data, different things like that, and they give you disclosures that future performance is not indicative of previous or past results. But when you're dealing with this cryptocurrency, and I told you, y'all, my hesitancy, and you're dealing with cryptocurrency, there is no regulatory, no governing. The people that created it have all the power, all the control, unregulated, no oversight, and they have the power. And most people don't do their due diligence. When you're investing in legitimate stocks on legitimate exchanges governed by the SEC and some type of government regulatory agencies, they have to give you disclosure statements. They have to provide you with prospectuses. They have to provide you with certain documents showing you what the business is about, what type of investments that they have, or what their investments are made up of, the mixture of it. They give you the disclosures. They give you the prospectuses. They give you, you have access to the meetings as a stockholder, so you get certain documentation. You get something. When you're dealing with this, what do you have? And a lot of people don't even do their due diligence. They just look at the numbers. Oh, look at this $1 billion. Oh, look at all this green. Look how it's increased in value 200% or 2,000%. But you got somebody who's running it, who owns 80+% of the value, that's able to funnel money through a sister company ran by Ellison lady, and then funneling money back, dipping into people's accounts, using their monies, but pressing a button that they can digitally show that you still have funds there, but you really don't, right? And all of these things they can do to manipulate, and then they can funnel money back from their sister company and inflate the price, because remember, we're talking about something that I said before, that's driven based on supply and demand. So they can show a false picture of demand by funneling money through their sister company coming back in, and they can inflate these numbers however they want to, because they control 80% or more of the value, and they may release 20% or 10% or 5%. You don't really know, right, what the value percentages are, because there's no prospectuses. There's nothing other than what they say. So you can't even really do your due diligence, right? And the next thing you know, you have people that have lost millions of dollars. There's a young man that I'm connected to. He did a video on Facebook several months ago about a friend, someone that he knew that had lost $3 million. So you have, if they say, oh, we've been hacked, what resource or what do you have that you can fall back on to say, oh, well, I want my money back? There's nothing you can do. You lose your money. It's not insured. There's nothing you can do. And there's the young lady, Ellison. What was her name again? Go over here and see. What was her name again? Carolyn Ellison. You can look it up for yourself. Put Carolyn Ellison, Alameda CEO. Google it, and you could pull up. You can see that's floating around an interview that she did with a couple young men. So one that I showed you on the screen, where she literally said, we don't use stop loss orders. It's really just elementary like math. It's like third level grade math. Look, personally, once again, I'm not touching this stuff. I'm not dollar cost averaging in it. And then I heard a pretty well-known guy in the financial space said that he felt that it still would be safe for you to take 20 to 25% of your investment dollars and put it in crypto. Look, folks, if you do more than 5% in any high-risk speculative investment, if you do more than 5%, do it at your own peril. Do it at your own risk. And honestly, I'm just going to say flat out, you're a fool if you do that. Any high-risk speculative, you have no level of insurance. That level of high-risk speculative investment, you should not put more than 5% of a total overall what you plan, and don't even invest more than what you plan, what you feel like you can lose, but 5% tops. In fact, my rule of thumb is, if it's a company that you work for and you want to invest personally in that company, only put 5% of your investment dollars. If you're talking about trying to retire or whatever, 5% max. Did y'all hear me? 5% max. Have you ever heard of WorldCom? How about Enron? You ever heard of Enron? 5% max, folks. And don't just rely on your pension either. I don't care how long you've worked for a company. Don't just rely on your pension, because you could retire from that place and then they could all of a sudden restructure everything and cut your pension in half. But people will tell you, stay away from the stock market. I'm trying to tell you, what you think is the riskiest, most dangerous thing to invest in is actually, y'all hear me when I say this in the context that I'm saying it, because you still have to provide certain disclosures, right? When you say certain things, talking about finances and investing and stuff. But relatively and corollary to it, it's more safe. It's a lot more safer than going. People have gone head all in, like pushing everything in the middle of the table, going in on crypto and going in on some of these high risk speculative investments, and dumping all of their retirement savings in the company that they work for. Your company does not own your 401k. They don't own that. No matter what some people try to tell you that your company owns it. No, they don't. Once you become 100% fully vested, those are your funds to decide how you want to distribute them, to invest them, what funds you want to put them in, how you want to diversify those funds, allocate those funds, 20%, 80% stocks, 20% bonds, or whatever, however you want to do it. Your company does not own those funds once you become 100% fully vested in your company sponsored 401k plan. They can't go in your 401k and take money out or change money or do anything. And whether you know it or not, the stock market is extremely difficult, if not virtually impossible, to manipulate the numbers, because it's too many companies that are on the exchanges, and there's various exchanges, right? So you do have some large companies that can influence those numbers in a certain way based on their earnings, right? But there's a reason why the government will bail out companies and keep them around, airlines, automobile companies, and things like that. It's because they employ so many people, right? Because they have jobs and they are a part of the economic stability of our country. Not so with crypto. Not so. And so hopefully you won't get swayed. There are people that's becoming desperate in these times that we're living in right now because things are tight. Money is tight. We saw the same thing that happened back in 2008, and there were people that was oblivious to what was going on in 2007, 2008. But people got desperate, financially desperate, because things were tight. People were losing their jobs. And I'm trying to tell you, and I've been telling you, we're about to go through that time again. Maybe possibly it won't be as bad as 2008, but who knows? I've told you, if you really want to watch somebody, I know how you may feel, or one way or the other, about the president who's currently the president now, but you better be watching what Jerome Powell, the chairman of the Federal Reserve, you better go back and watch what he is saying publicly. Because the Federal Reserve, they are the ones that make, and they're the ones that institute in our country economic monetary policy. Right? You see where Joe Biden wanted to give money, right, about this with the student loan forgiveness, and a federal judge struck that down. Right? So he can't just go out there and decide what he want to do. Even if everybody in his cabinet say, yeah, let's go do that, he has to still get approval to do it. But the Federal Reserve could say, we're going to raise interest rates, 75 basis points. They don't have to ask anybody's permission. Do you hear me? So if you want to be listening to what's really going on, you need to be listening to the Federal Reserve, what they're saying. And they've told you that rents and leases have lagged behind forecasted projections on how much they thought they were going to increase. So therefore, what they're saying is expect your rent and your leases to go up in price on your apartments or your house that you're renting. So, I'm trying to help you, especially my people. You feel me, melanin skin folk? You better get to the point where you start, hear what I'm saying, trusting the financial system. I'm not saying trusting it over God. That's not what I'm saying. But you better start understanding that our financial system, our economic system is built off of something. And the way the stock market is structured is built off of that economic system. It's a part of the economic system. And if you think that the government or some big corporation is going to step in and help to save FTX from collapsing, good luck with that. Good luck with that. So while you are afraid of banks and you got this whole conspiracy about the stock market and this conspiracy about all of that, I'm trying to tell you that that's what evens the playing field. You can get out of prison. You can go to jail. You can have felonies on your record, but there is nothing that can stop you from opening up an online trading account and taking some of your funds and starting to invest them dollar cost averaging $50 a month, $100 a month into stocks, ETFs, mutual funds, or something to plan for the future. There's nothing that tells you that you can't do that. You can go down and try to apply for a job and they'll tell you we don't hire felons, right? And you can walk around with your head hanging down. But there's nothing to tell you that you can't go and buy a home and then rent that home out and cash flow that house or that, multifamily unit and begin to build some wealth for yourself. Even with a criminal record, you can invest in stocks. You can go ahead and y'all ain't trying to hear me tonight. But you'll listen to some of our people that'll go around and tell you some foolishness like this. That'll tell you, go to the bank. I ain't gonna say the dude's name, but just Google it. He'll tell you, go to the bank and tell the bank that you want to buy a car. Don't make it no little cheap car. Make it a really expensive car, $50,000, $75,000, $100,000. Tell them you want to buy that car, and get you, give them the numbers, the VIN number, and everything. Just make up this stuff. Now you got to have a friend to help you, though, right? You got to have a friend to help you with this one, because the bank or the credit union has to write this check in the name of somebody, right? So you tell them that you want to buy this car. You give them the VIN number. You give them all this information that you want to buy this vehicle. And then they cut the check, give it to you in the name of this person. And you take this check to this person. But you cash the check and you take the money that you went to the bank and told them that you needed a car loan, and you take the money and you put it into something else. You invest it in stocks, or you start a business, a trucking company. You can do whatever you want to do with the money. But you went to the bank and told them you was buying a car. You gave them a VIN number. You told them who you was buying the car from. They cut you the check in the name of the person, but you colluded with this person to go ahead, get this money, cash it. You probably gave them a little finder's fee, 10%, 20%, whatever you gave them of the funds, and you had no intentions on actually going to buy the car. You was going to actually use the money for something else. Just like some of y'all went out there and fraudulently got money from these PPP loans or whatever they call them. And I'm trying to tell you that when somebody come knocking at your door screaming, hollering that they from the DEA, ATF, CIA, FBI, or whatever. Don't be crying discrimination. Don't be crying. See, look, just they trying to oppress black folk again. Stop it. Because we need to stop this foolishness and going around and committing bank fraud, credit card fraud with all of this manipulative, creative financing garbage. Telling people to break, to literally, totally, like, you get the statements and the documentation from the credit card companies when you apply for the credit cards, and they tell you what their policies and procedures are and things. But but you tell people to do things that go against the policies of the credit card company and call it what all this. Some folk need to go to jail. And then when you get all your credit cards canceled and they blacklist you, see how they always oppressing us. Stop it. Absolutely just stop it. Because the truth is, some of us are desperate because we're not good managing our money. So we get desperate and we start making bad decisions and we start doing things that are unethical or whatever you want to call it. Things that are manipulative, that are speculative. We start taking crazy risk, get rich quick schemes and all of this stuff. I done told you about chasing the green. Chasing the green. Somebody tell you about the latest, greatest. Look at the numbers. Look how they going. Look at that. Look at the number. They've done 2,000%. You can't get this money in stocks. You can't get this money. And then look, here you go, taking your hard-earned money, your savings, the money that you're supposed to be feeding your family with, and putting it over to some speculative investment because you saw, look at that. This is the greatest, hottest thing since sliced bread. And then when you lose your money and you got to come back home and tell your wife or tell your husband that you lost all your money, all your savings, that you got to pull your kids out of school, that you got to move again, that now you got to go down and get food stamps or get on Section 8 because you lost your house. Or you start committing fraud. You start lying on credit card applications. You start going down to the bank lying to get loans. And then tell this lie. I'ma say it. Because this is a lie that then you start saying, white folk been doing this, playing this game all along. You're lying. Stop it. Stop it. We dip real quick into the woe is me. Look at how we've been oppressed. Y'all gonna be mad at me, but we do it. When all we gotta do is stay ethical. Our people got a history. Reach it. Do your history. 1921, Tulsa, Oklahoma. Do your history. Our people built banks and they did some extraordinary things, built communities. Look at how strong we were in 1954. Over and over again, I've told you to read go and see the documentary that's on YouTube. I'm not going to say the name of it no more. Look how strong we were. The Department of Commerce been tracking our spending habits since 1939. We got $1.6 trillion, black people, of buying power in America. But because, I ain't going to say that. But we have opportunities to really do something great, to really propel our people forward, your families, to build something strong for our families. But we'd rather go out here scamming and doing all kind of unethical stuff. just to try to make a quick dollar. And then we're telling our daughters, girl, find you a man, and our daughters are more impressed with scammers and drug dealers than they are hard working 9-to-5 men. What is this stuff that we have done to our families? I may sound like I'm a little upset about it, and maybe I am, because we've gotten to the place where we've just seemed like sometimes we lose common sense. We go to church, and the scriptures clearly say, the scripture in the Bible clearly say, he that gathers little by little makes it grow. It's giving you a glimpse and a platform and a picture of what it means to truly build wealth. A wise man leaves an inheritance to his children's children, that he's thinking long term, that he understands that he's got to manage the little that he has well. He that gathers little by little makes it grow, and that you add to it and you add to it. And eventually, as you continue to do this, you build up enough volume, and that volume has value, and it's something that's valuable that you can leave not just to your children, but to your children's children. That you systematically invest in, you save, and you live beneath your means. And you think long term rather than just it's about what I need right now. And so that you got to get rid, you got to play the lottery. If you win the lottery, most of you wouldn't even know what to do with it. And I keep telling you, if you can't manage $200 well, and you can't manage $2,000 well, and you've dug a big hole at a mess, and made a mess, and you're in debt, and you got all of this stress on you because of financial troubles of just trying to manage $2,000, what kind of mess you think you're going to make if you get $200,000 or $2 million? What kind of mess you think you're going to make then? You're going to tear your family up. You're going to really neglect your children because this is so important to you. You try to hold this together, and you got to paint a certain picture for people on social media, and you got to, present your life a certain way on Facebook and on Twitter and on Instagram. We got to do better. So instead of just doing the right thing, what do many people do? Then they resort to fraud. Then they resort to lying on credit card applications, lying on applications to get a job, lying to the bank to get loans, and doing all of this stuff. You know what I'm saying? Rather than go get a job and work and get some benefits, you got people that went out here and lied over the last 2-3 years to get some free money during the pandemic. Or just, I'd rather get this unemployment than go to work and get a job. And then when things get all messed up and jacked up, you want to blame, I'm going to say it again. Then you get mad and you want to blame the white man. No. People, where's our pride? Where's our dignity? How do we get so far away from the foundational principles that some of our forefathers gave their lives for? And that's just having a good, hard work ethic. Why is that so despised now? Why is that looked down on and frowned upon, to go to work and have a job? Something that should be honored, to have self-respect. Look. You could do it if you want to. And you can listen to some of these folk if you want to. But I will tell you again, there's no fast track to building wealth. It's a process. You got to learn. You got to go through the process of changing your mind and how you think. You got to build your net worth over time. You got to manage your credit well and be responsible over your credit and pay your bills on time. If you mess up, start over again and do it until you learn, and read books and listen to people that's telling you the right thing, and really invest some time into learning and growing and understanding. because there's no fast track to it. Because if you get it and you haven't worked for it and you haven't done anything to earn it, you haven't put any blood, sweat, and tears, you haven't got it out the mud, you're not going to appreciate it when you get it. Look at our children. When you give them too much stuff and you don't require them to do anything, to earn anything, to have to put any work or effort to do anything to really help other people, they become selfish and they become entitled. And they want everything easy. I've been thinking about this a few days because it disturbs me to see people take their life savings because they think this is it. This is going to change my life. And they put their savings, into something that's ran by some goofy looking, strange acting, weird talking people that nobody's done any background checks on, research on, don't know where they came from, what they've done for a living. Just give them your hard-earned money. Why? Because everybody else doing it. Because look, it's worth $80 billion. And then you wake up one morning because this crypto stuff, I told you, it's trading all night, all 24/7. You can't hedge it. You can't do really nothing with it. Right? And then you wake up one morning and everything's gone. 5%, folks. High risk speculative investments, maximum 5%. And make sure you have some savings and have some cash reserves. Leverage your investments with cash reserves and really learn how to use credit wisely. And look, right now is a time you should not be carrying balances on your credit cards. Use your credit cards to get your points, to work that system of getting your points, right? Your cash back rewards and all of that stuff. But don't only use your credit card for something that you was going to spend cash on anyway. Then soon as the amount post, pay it right off. Don't carry no balances. If you can't afford to buy it, stop this foolishness of, well, I'll just use my credit card. No. Now is not the time to be doing that. And if you think everything's hunky-dory and doing well and just, everything's peachy keen, just things are a little bit pricey and a little high right now. Okay. All right. Jerome Powell said, we're committed to a sustained period of below trend growth. And we're committed to producing a soft job market. They want employers to put on hiring freezes and to lay people off. They're trying to slow the economy down because people are spending too much money. They're trying to purposely slow the economy down to induce layoffs. Have you recession-proofed your finances? Have you gotten out of debt? Have you paid down your credit cards under 10% at the bare minimum? Pay them off preferably. Have you gotten out of personal loans? Now's not the time to be holding on to personal loans. It's not the time, people. Get your cash reserves up so that you have something to fall back on and that you can leverage your credit. It's a good thing to be sitting on a certain amount of available credit right now, but keeping your utilization very low, because if things start getting tight and you got your credit cards maxed up, don't be surprised if next year some of your credit card companies close your accounts because they get nervous and think that you are now a high risk because you're running too high of balances on your credit cards. And then they will start closing your accounts. Keep your debt to income ratio. And I don't mean to come across, oh, he just come across like he just know everything. No, I'm trying to help us so we can do better. So we can make it through the recession. If for some reason you do get laid off for a few months, or whatever possibly may happen. Right? So that you can keep your credit cards open and don't get your accounts closed, or have somebody knocking on your door in the middle of the night coming and asking you about fraud or something, or a check that you wrote, or a transaction that you did, or something like that, because you had your hands muddied in some stuff that was real speculative and questionable. Because we get desperate. So I hope that if you watch this video that you'll share it with somebody. Come through, press the heart button, the like button. Let's get so the algorithm kicking in, because some folk need to hear this. Because this ain't about telling child invest in this. No, I understand the fiduciary responsibility and the rule of you need to act as a prudent man when you're in the financial space, right? So you'll never hear me tell you to invest in a particular stock or none of that stuff, right? Give you the broad spectrum and the broad picture and give you some solid, sound advice. And you could test anything that I say. You could test it. Test it. Test it. 5 months ago. And there was people looking at me sideways because I said about I ain't touching crypto. It's too risky for my blood. And if I did, 5% max. And once again, if you're investing in the company that you actually work for, that pays your bills, and that's where you get your primary income from, if you're investing in their stock or anything relative to that company that you work for, 5% max. That does not include your 401k, because your company that you work for does not own your 401k if you are 100% vested. Those are your funds that's under your management. If your company collapsed and fell apart tomorrow, those funds are disconnected from that company. That company has nothing to do with your fully vested 401k funds. Those funds are yours if you're 100% fully vested. They're yours now. But your pension, not so. And your stock purchase plan and your stock bonus plan, whatever, not so. So 5% max of your entire complete investment portfolio. But thank you for watching. I really appreciate you all. If you can, drop some comments below. I'd love to hear your thoughts on what we've shared and had this conversation about tonight. But if you watch it on YouTube, press the subscribe button with you and ring the notification bell so you can get uploaded. We just want to hope you over here. We're just trying to hope you, right? And actually try to create a space where we begin to really truly think about and plan for our futures, where we really have some conversations about building generational wealth and a financial legacy for our families. But if you're watching here on YouTube, press the subscribe button, press the notification bell, and share the video. If you're watching on Facebook, the Working People's Podcast, or my personal page, James Hollingsworth, do the same. Share the video with your friends, family, your cousin, them. Drop some comments below. I'd love to hear from you. And also press that heart button or the thumbs up like button. Thank you. Appreciate you. And also thank you to Rodney Williams and Second Friendship Missionary Baptist Church. We've streamed live to their page again tonight. So shout out to Rodney Williams, my brother, my friend, Pastor Rodney Williams, and the ship. So I got to go. I'm signing out tonight, but drop some some comments, because I'm gonna come back through and read some comments if you drop some below. Thank you all for watching tonight, but I am out.